Good afternoon. This is my presentation for the February Metals Investor Forum in Toronto, Canada. What is technical analysis? Does TA work on junior mining stocks? That is the title of my presentation. By the way, I understand why all those Canadians go to Florida during the winter now, being in Toronto in February. Man, it's cold, guys. As usual, forward-looking statements. TA doesn't work in junior mining stocks. If I had $1 for every time I've read or heard this comment, I think I could buy an ounce of gold at today's prices. That's how many times I've heard it. I understand the root of this notion, where it comes from, but it reveals a superficial understanding of what technical analysis is and how it can be utilized effectively, even in junior mining. Technical analysis, or TA for short, is a form of financial analysis that involves the study of charts and patterns in market data. We're looking to identify trends, evaluate probabilities, and manage risk. Just like fundamental analysis, technical analysis does not involve a crystal ball that predicts the future with a high degree of accuracy. And that's what I always find interesting about people who bash technical analysis or are negative on it. It seems like they think that there's another form of analysis that uses data from the future and predicts the future with a high degree of accuracy. No, fundamental analysis is also analyzing past data, trying to infer trends and find anomalies in data, right? And so technical analysis is just a different form of working with data. That's all we're doing. We're working with data. But with technical analysis, we're usually focusing on price and volume, trading history of stocks, right? And through price and volume, we can learn a lot about what a market is thinking, sentiment on a stock. I mean, I can look at a chart and I can tell a lot from the price history, from the volume history. There's a lot of information there, right? So why wouldn't we want more information, more data to work with, right? And most importantly, with technical analysis, we're working with probabilities, right? We're gauging probabilities. We're trying to manage risk, identifying support levels on a chart, and trends. Really, I mean, the simplest way to use charts is just to look for trends. And if you can identify trends and participate in them, you're way ahead of the game, right? Trends are very powerful in markets. So let's take a look at a chart. What does this chart say? So this is a very basic chart. We have some information at the top, including the market cap, the trading history from last Friday, the volume, and we can see what Scotty Resources did in 2020, at the end of 2023, 2024, 2025, and we can see what's happened recently. So the first thing I notice here is that Scotty was pretty boring for a long time, right? 23, 24, 25, it really didn't go anywhere. And then something changed in August 2025. Something changed in a very big way. And look at what the share price has done. Actually, if we updated this to today, it's actually even higher, right? So we went through a period of consolidation, a basing process is what we would call that, and then a breakout, and then a pause, and then another breakout, all right? So this is a very bullish chart, and you can see the volume down here confirming the price action. This is the same stock, the same time frame, but I'm looking at it in a different way. I usually use candlesticks instead of lines. Candlestick gives me a little more information. It tells me where the stock opened on a given week or day, where it closed on a given week or day. And I can just infer some other information from the candlesticks. It's a little more advanced, but not too hard to understand, right? And then I have some indicators. I have the relative strength index. This tells me it's a bullish stock. Relative strength is high. It's above 70. And the true strength index, which recently cooled off a bit, but now it's regaining steam, helping to confirm uptrend. So this is a very bullish chart. Scotty's a bullish chart. This is actually the biggest company in the TSX venture. This is a $10 billion market cap, Artemis Gold. And see that uptrend, right? Line chart, uptrend, bottom left, upper right. That's a trend. If anybody in here jumped aboard this trend at any point in the last 3 years, you'd be doing very well, right? And you wouldn't need to overthink it. Just hold the stock, let the trend continue to extend, right? But now, again, we're putting candlesticks, we're putting some indicators on here. There's a little more nuance. And with this look at the stock, we could say, well, maybe this is cooling off a little bit. The uptrend is weakening in recent months. It's not making new highs recently. And it had a big reversal. You see this big red candlestick here? That was a bearish reversal, and it has not managed to regain that $48 price level that it reached in January, right? So still a very bullish chart, benefit of the doubt to the bulls, but maybe some room for caution here in Artemis. So to maximize the value of TA, we shouldn't only just look at charts, right? We should not see the chart in a vacuum. We should take the chart, the trend, investor sentiment, and analyze it within the context of fundamental data. More data is better as long as it's good data. Right? As long as it's good data, it's not false data. We want high quality data. As long as it's good data, then that's great, right? The chart is just one tool in the toolbox. It's not the only tool, but it's an important one, right? I couldn't imagine buying or even selling a stock without looking at the chart first, right? Whereas I could imagine buying a stock without reading every news release or analyzing every single slide in a presentation or SEDAR filing, right? The chart is important. And we should also acknowledge that price and volume are basically the only two data points that everyone can agree on, right? Like we could read a news release, we could look at a drill result, and we could have 10 different opinions in the room about what is actually going on. But price and volume, everybody has to agree on. It's the market price, it's the last trade, what's the volume. Everybody can get the data if they want to, right? So there's a lot of truth in charts. There's a lot of truth in TA. There's a lot of stories that can be told by CEOs and other investors. But the chart is the chart, right? The chart is truth. So let's take a look at some real examples of how I use TA in junior mining stocks. So the drill results driven breakout. So this is probably one of my favorite setups, especially in a bull market like we're in now. The news is good, really good. And the drill results are out. It's almost market open. And you're going to have an imbalance of buy orders on the open, right? So do you buy, right? That's the question. And so one of the ways to evaluate this is these 5 criteria. So these setups are strongest when there's already an uptrend in place, longer term uptrend. The stock has been in a consolidation for weeks or months. So it seems like this is a surprise to the market. It wasn't run up ahead of the news. The new drill result or drill results are step out holes, right? They're not drilled in an area that's already been drilled before. So this is fresh territory, potential for new discovery, potential for growth, expansion, right? And also better when there's no shares that are unlocking in the near future and the company has a healthy treasury. So way better when the company's got money in the bank and they're not going to do a financing a few days from now, right? And to top it off, to make the setup the absolute best, drills are on site, drilling is ongoing, and more results will be coming, right? So this is kind of a secret sauce. Look, you can make money when 3 of these are present, 4 of these criteria are present, but when all 5 are present, it's really good. And this is an example, San Lorenzo Gold. So this company is here today. And look at what happened in January, right? Big breakout within the context of an uptrend. And what happened? Another drill result from Cerro Blanco at the Salvadora property in Chile. And in total, it's 222 meters in the first hole of the drill program and averaging above a gram per ton gold, right? So that was a very good hit. The hit rate continues to be excellent. The stock gapped up, breakout gap, and it closed near the high of the day. But the crazy thing is, a lot of people don't like to buy after a stock has already jumped a lot. But look at what it's done since, right? It just keeps going up, keeps marching up. So even if you bought at the end of the day, the end of the Monday, you're looking at a 70% gain now, right? So these setups, these trades work very well when all the criteria are present. And in San Lorenzo, they had just done a financing, so there was no desperation to do an immediate financing. Drill was on site, turning, assays were pending for a bunch of more holes. And this was a step out hole, right? And more step out holes were coming. So Kingfisher Metals, another one. So here's an uptrend. The stock was already moving up a bit. But if we look to the left, just getting back to where it was in September, right? So it was not really crazy overbought or anything, right? And they announced hole 2511 from the Hank copper gold porphyry. You can see the volume here. And so you could have bought it on the day they announced the news, January 22nd, right? You could have bought it the morning of this announcement, and it closed basically at the high of the day. And then within literally the very next trading session, it jumped all the way to 90 cents, right? So this was an incredible move in Kingfisher. This was a Thursday, and this is what it did on Friday. It consolidated for a bit, but then it pushed back up to near 90 cents, right? So this was a very good setup. You could have bought the morning of the news release, and within a very short period of time, you almost doubled your money in Kingfisher. And this was absolutely a new target area. It was a step out hole. Talon Metals. So this one didn't quite meet all the criteria because they had money, but the market knew they were going to raise more money, right? So there was kind of a financing overhang when this discovery hole was announced in May of 2025. Basically 35 meters of massive sulfides, an incredible hit. But still, despite the fact there was a quote unquote financing overhang, and they in fact did announce a financing soon thereafter, you can see what it did and what it continued to do. And then if we actually zoom to today, this stock is way up. It's over $8 a share, right? So Talon Metals, another really good example of a discovery hole and a breakout on drill results, right? So a technical breakout. The chart is breaking out to new multi-month highs, breaking above key resistance levels on drill results, right? So very bullish setup. We love big bases, the big booty base breakout. So this was Banyan Gold, and Banyan put in place what we call an ascending triangle throughout the second half of 2024 and the first half of 2025. And then in summer 2025, it started to push up against a resistance level, about 28 to 30 cents. And you can see that chart technicals. I like when the true strength index is crossing over bullish like this. I like when the RSI is between 60 and 70. You can see the ascending triangle is in place, and then the news starts to flow, right? So we have a nice chart setup, and then we get the drill results, almost 4 grams of 38 meters from airstrip, and then we get an updated resource. This was a significant improvement on the first resource, on the previous resource, and suddenly we're looking at like over 4 million ounces at near a gram at Ormac, right? And so you can see what happened. So the chart setup was there. The news flow confirmed the bullish breakout. Volume came in, and you can see what price did. And if we fast forward to today, this is almost $1.40 today. So this is a really successful outcome for big booty base breakout from this ascending triangle in Banyan Gold. The breakaway gap. So gaps are also highly misunderstood by a lot of traders, a lot of investors. A lot of people think that all gaps have to be filled. And while most gaps do get filled purely as a product of volatility, not all gaps have to be filled, or at least not filled anytime soon. And we want to actually really pay attention for breakaway gaps. So Copper Giant was a breakaway gap at the end of November. Look at that gap higher on a Monday morning, and then it closed basically at the high of the week. This was a very powerful week for Copper Giant, right? It literally jumps from about 21 cents to 31 cents. And what's going on? Well, billionaire investor Frank Zustra starts filing that he's buying stock, right? So lots of stock being bought in the market. And the CEO in January also puts in another $200,000. So suddenly insiders are buying up a lot of stock, and you can see what the stock has done, right? So obviously the signal was the insider buying, and the result was a breakaway gap followed by week after week of accumulation and grinding gains all the way up to nearly $1 a share. So that's absolutely one of the best examples of a breakaway gap in a junior mining stock. Now, it's not all good news. It's not all stocks going up. Even in a bull market, some stocks go down. So sometimes we get like the big sell day, right? The really bad news day. Have you ever been long a stock that delivered news and then proceeded to get absolutely clobbered? Yeah, me too. So when the volume is unusually heavy, the stock closes down more than 20% and near the low of the day. On news, that's a big sell day. And that usually means we shouldn't rush in to buy the stock immediately, right? Sometimes it'll bounce, but more often than not, in my experience, it will take a few months at least for the stock to base out and reset, right? So this was an example. IDEX, first drill results, you can see the stock had run up and the results didn't meet the market's high expectations, and you can see what it did over the next several months. Now, I would say that this stock is actually basing out and might be ready to actually start to move up again, but you can see it's taken almost 6 months, right? And there were plenty of opportunities to buy it cheaper during that time. Emerita, right? So this was a great example of a big sell day, maybe the best example in 2025, down 70% on massive volume. Well, it did bounce back a bit at first, right? It did actually bounce. So traders got a chance to make a little trade and get out for a profit. But now look at what it's doing. And actually, when you look at the bounce in the context of the size of the decline, it's a very weak bounce. And I would say this is a bearish stock. No reason to try to pick a bottom here on Emerita. 9 Mile Metals, this was a recent example just a couple of weeks ago. And you can see the big sell day here. And what has it done since? Not much. In fact, it's kind of grinding lower, right? So enormous volume on the selling. I believe that was February 17th. And this one probably in the no-go zone for at least a couple of months, just because of this island top and the big sell day, right? Now let's take a look at a trade setup that I discussed at the last MIF, the bull market correction knife catch trade setup. Yeah, so let's take a look at this one. So Hecla, it's a silver miner. So obviously, look at that uptrend, very bullish chart, rolls over 6 days in a row, comes down to my 40-day moving average. RSI drops under 50. TSI is not quite oversold enough for me to get in. So I give it some time. Let's see it find some support. Support emerges near 21. Now the setup is getting very juicy. This was mid-February, and the TSI is almost down to 0. So it's time to make an entry. And in fact, on February 17th, it had a failed breakdown under 21. It closed back above 21. And so that was a buy signal for me. And now look at this setup. This is a very interesting chart pattern trade setup because it's hammered out this trading range between 21 and about 24.40 on the upside. The technical indicators, the TSI moving above 0, RSI is above the median line pointing higher. So this is a very nice setup. This looks like a bullish buy signal, and there's an open gap up at 26.30. So if you ever want to jinx a trade setup, get up on a stage and talk about it in front of an audience. Let's see what Hecla does here. This is a stock setup that I really like, and I'm long. Now, sometimes trade setups don't work out, right? Like Hecla, I've made money on that one, but Vizsla, not so much. So this kind of triggered my bull market correction knife catch trade setup. Actually, this day here, where it closed at 494, I was long from 475, and I was thinking, this is a pretty good setup. Maybe it's going to move right back above $5, and I got the low. Like I caught the knife just perfect, right? Nope. Look at what happened. And I'm not going to get into the news here, but obviously the news was very, very bad and very sad. And this stock is still in search of a bottom. So literally the very next day, I'm stopped out, right? On this next big red bar, I'm selling. I'm out of the stock, right? And I know a lot of people don't like to use stop losses. They don't like to stop out. They don't like to sell low. Well, sometimes if you don't sell lower, you're going to end up selling much, much lower, right? And this one has not really put in evidence of a bottom yet, okay? So this is just sort of a no-go zone, and that was a losing trade for me, right? So sometimes we have these chart setups. We have a criteria that we like, but it doesn't always work, and we've got to manage risk, so we got to take the stop loss. Endurance Gold, a strong uptrend. And this is the last stock I'm going to talk about in this presentation. And just this is a very interesting one. I'm going to leave you with a setup to watch. All right. So I'm not saying to buy the stock. I'm saying to put it on your watch list and let's see what happens. And maybe there will be a buy signal coming up here in the future. So Endurance Gold uptrend. You can see that bottom left to upper right. This was as of mid-January. The company announced an MRE, beat market expectations. So 1.45 million ounces of gold at 2.3 grams per ton, mostly open pit, right? You can see what the stock did, right? So that was not drill results, but that's a news-driven breakout. Very bullish, in my opinion. It closed at 58 cents on that day of the bullish breakout, right? So all of a sudden, the stock goes into the buy category. It's a bullish stock. And you can see what it did after that. It went all the way up to 90 cents. Then it retraced back to the 50s. It's been consolidating. This company has an open financing. They will close it in less than 2 weeks. So literally, I see this as a bull flag, right? It's in an accumulation consolidation phase, right? You go from 25 cents to 90 cents. That's a big move, right? That's almost a 4x move. So some consolidation and retracement is healthy, resets everything. You can see the RSI is right at 50, right? And so I actually like accumulating it here, but you could also just wait for the bull flag to hammer out even more, and then for a potential breakout on volume to the upside from the bull flag. And that could be a potential buy signal. Maybe that will occur once they close the financing in a couple of weeks, right? And then they'll have a drill program starting in April and lots of drilling throughout the spring and summer. So this one, the technical chart setup is very constructive in my opinion, and the fundamentals agree with that. They align. Bullish, bullish, bullish endurance gold. And so just closing comments on technical analysis and trade execution. I think the most important thing to understand about charts is that they give us important data, but it's how we interpret the data, how we use that data that really matters. And perhaps, again, the most important aspect of charts in junior mining is helping to manage risk and also identifying trends and identifying breakout volume abnormalities, right? Breakout moves, especially news-driven breakout moves. And, you know, we could have all the different chart setups, lots of great chart ideas, lots of great trade ideas. We could come up with 10 to 20 great stock setups on a daily basis. But that's only a small part of the game. It's actually managing all those trades, managing the risk, and having effective profit-taking strategies that's really going to set us apart in terms of the results, right? So charts are just one part of the game, one tool in the toolbox, but for me, they're a very important part. And so, yes, charts do work. TA does work in junior mining. I hope you came away from this presentation with a greater appreciation for how charts can be valuable in the analysis of mining stocks. Thank you for your attention.